Hey investing friends, I'm Mr. Financial, and in today's video, I reveal every stock in our $141,000 Tfsa dividend growth portfolio and what stocks we bought in April. Let's do this! For the newbies to the channel, my wife and I do our finances together. Actually, we do everything together. We have 3 accounts through 2 brokerages for our Tfsa, Scotia iTrade and Wealthsimple. Here's our portfolio size as you can see in Blossom Social. If you want to follow my portfolio for free, download the app using the link in the description. Now let's look at our individual holdings and their size and what we bought. Our 4th largest holding remains Bank of Nova Scotia, a diversified bank. It represents 7.6% of our portfolio at 5 figures. If you've been following our portfolio, you might notice that this has been dropping down the list of top holdings as we build out other positions. Bank of Nova Scotia will be reporting Q2 earnings on May 28th. We dripped 1 share at a cost of $62.69. That added $4.24 to our annual dividend income at a yield of 6.8%. Next, we have our 5th largest holding and biggest in the midstream oil and gas industry, TC Energy Corp, at 6.6% of our portfolio. It was 7.2% last month, but with the share price selling off, our market value took a huge hit. TC Energy Corp will be reporting earnings on Friday, May 3rd before market open. I'm excited to see the progress they've made on dividing the business. We dripped 3 shares at an average price of $48.91. That added $11.52 to our annual dividend income at a yield of 7.9%. Next up is FORTIS, representing 5% of our portfolio. FORTIS is our one regulated electric utilities company. This will be reporting its Q1 on May 1st before market open. I'll be looking out for its CapEx CAGR over the next few years. Next, we have our 2nd largest holding, RIOCAN Real Estate Investment Trust. It represents 9.5% of our portfolio as another 5-figure position. This will continue to slide down the pecking order as we complete our rebuild. RIOCAN will be reporting Q1 Tuesday, May 7th after market close. What do you think we'll see in the retail REIT space? Let me know in the comments below. We dripped 3 shares at a price of $18.30. Terrible timing for the drip, I know. That added $3.33 to our annual dividend income at a yield of 6.1%. If these kind of videos are your jam, subscribe and hit the like button. And grab a beer because you know you deserve it. Next up, we have BCE Inc. at 4.3% of our portfolio. This is the smaller of the 2 in the telecom services industry. This is bond-like in the portfolio and will continue to be dripped at these price levels. BCE will be reporting Q1 results on Thursday, May 2nd before market open. I'm expecting some pretty terrible results and possibly further downward pressure on its price. We added 2.6 shares at an average price of $44.92. That added $10.35 to our annual dividend income at a yield of 8.9%. Next, we have MANULIFE Financial Corporation at 5.1% of our portfolio. That puts it right in the middle of the portfolio, position-wise. It is our one holding in the life and health insurance industry. MANULIFE has done exceptionally well over the last year, and I still see a lot of upside in the year ahead. MFC will be reporting Q1 results on Wednesday, May 8th, after market close. Our next position is ENBRIDGE. It represents 6.2% of our portfolio in the midstream oil and gas industry. With its high yield, it provides a large portion of our dividend income. ENBRIDGE will be reporting Q1 earnings on Friday, May 10th. We added 0.3 of a share at an average price of $45.91. This added $1.16 to our dividend income at a yield of 8%. Next up, TELUS Corporation, our other telecom, makes up 5.7% of our portfolio as our 7th largest position. Telecoms are totally out of favor and in a tough place right now, and TELUS is no exception. They will be reporting Q1 earnings on Thursday, May 9th before markets open. We added 2.6 shares at an average price of $21.65. That added $3.88 to our dividend income at a yield of 6.9%. Next, we have PEMBINA Pipeline Corp. It represents 6% of our portfolio. It is now creeping up on ENBRIDGE in sheer size because of the share price growth. We haven't really added to this position in a long time. It is still the smallest in the midstream oil and gas industry in our portfolio. PEMBINA will be releasing Q1 results on Thursday, May 9th, after markets close. Now, our largest holding in our portfolio and one of my top conviction stocks is Capital Power Corp. It has taken a beating the past year. It represents 14.1% of our portfolio and is nearly the size we wanted at full build out. That will translate to about a 10% weighting given our current Tfsa portfolio value. Capital Power Corp will be reporting Q1 earnings on Wednesday, May 1st, before markets open. We dripped one share and bought 11.7 more at a price of $35.58. That added $31.30 to our annual dividend income at a yield of 6.9%. Next is First National Financial in the mortgage finance industry. It represents 9% of our portfolio as our third largest position and our fourth stock at 5 figures in value. The share price has been under a lot of pressure, with real estate sales in Canada just getting hammered. They reported earnings on April 30th after market close and reported record high mortgages under administration of $145 billion, a 9% increase over Q1 2023. Next up, Brookfield Corporation. It represents 3.6% of our portfolio as one of 4 asset management companies we own. We're at about half our desired position size, so lots of buying in store. Brookfield Corp will be reporting Q1 earnings on May 9th. You do not want to miss that one. We added 4 shares at a price of $53.55. That added $1.74 to our annual dividend income at a yield of 0.8%. Our newest holding, MCAN Financial, now represents 2% of our portfolio after we did some buying. It is in the mortgage finance industry as a mortgage investment corporation. MCAN Financial will report its earnings on Tuesday, May 7th. I'm really trying to build out the position at current price levels. We added 45 shares at an average price of $15.62. That added $70.20 to our annual dividend income at a yield of 9.9%. Remember, this would normally be taxed at the marginal rate since MICs don't pay any tax on their earnings. Next up, FIERA Capital Corp, our smallest asset manager. It represents 2.6% of our portfolio after its share price started to drop yet again. Hopefully we didn't miss out on our opportunity to exit this position. FIERA will report Q1 earnings on Wednesday, May 8th. Are you noticing a trend in our portfolio when it comes to the earnings season? Next, we have SmartCentres Real Estate Investment Trust. It makes up 6.2% of our portfolio. This is in the exact same position as RIOCAN and is getting hammered. SmartCentres will report Q1 earnings Wednesday, May 8th, after markets close. We added 5 shares at a price of $22.60 a share. That added $9.25 to our annual dividend income at a yield of 8.2%. Next up, we have Toronto Dominion Bank at 3.2% of our portfolio. This is our other diversified bank we own under TFSA and is at about half a position size right now. TD will be reporting earnings at the end of the month. There has been a lot of talk about its involvement in money laundering, and they've already set aside $450 million to start. Would you like to hear my opinion on all this high school-like drama? In any case, we added 0.1454 of a share at a price of $77.53. This added 59 cents to our dividend income at a yield of 5.3%. Next is GoEasy Ltd. It is our one consumer finance company that makes up 0.5% of our portfolio. We have a great cost basis, but failed to build out the position before it broke out. We want this at 5% of our portfolio. It reports Q1 earnings on Tuesday, May 7th, after markets close. Next, our one ETF is VFV, Vanguard's non-hedged S&P 500 index ETF. VFV still makes up 0.2% of our portfolio, and with the S&P 500 flying high, I haven't been able to add to this in our TFSA. Our target still remains 5%, but that won't happen with the PE ratio sitting at 26.1. And our last position is CANOE EIT Income Fund. It makes up 2.3% of our portfolio. This income fund is technically in the asset management industry. This fund has been as consistent as they come with awesome management. Look at that 5-year CAGR of 17.4%. Wowzas! We did a decent amount of buying in April. We deployed a total of $1,945.13, adding $147.56 to our annual dividend income at a yield of 7.6%, thanks to MCAN Financial. As a dividend growth investor that will soon be transitioning away from my secular work, I need to protect my portfolio from drawdowns as much as I want it to grow. One of the ways I do this is by sector and industry diversification. Here's the breakdown of our portfolio by industry as of April 30th. Diversified banks make up 10.9% of our portfolio. Midstream oil and gas makes up the largest at 18.8% of our portfolio. This will drop to about 13% at complete build-out. Regulated electric utilities makes up 5% of our portfolio. Retail REITs make up 15.7% of our portfolio. Much like midstream oil and gas, this will moderate down to 13% at full build-out. You see there, our telecom services make up 10% of our portfolio. Life and health insurance makes up 5.1% of our portfolio. Independent power producers make up 14.1%. This will drop to about 10% at build-out, as I mentioned with Capital Power Corporation. Asset management makes up 8.9% of our portfolio. Consumer finance makes up a massive 0.5% of our portfolio. This will eventually get to 5% at build-out. S&P 500 ETFs make up 0.2% of our portfolio. Again, our target is 5%, and yes, I know this isn't an industry. And lastly, mortgage finance makes up 10.9% of our portfolio. So there you have it, the 18 stocks and 1 ETF we own in 10 industries. Stay tuned for our dividend income video next week. Thank you so much for watching. You guys are the best. Ci vediamo. Until next time.